Welcome to this explainer. Right off the bat, we're diving into building your ultimate financial survival kit. I know. For a lot of folks, just hearing the word finance brings up nightmares of complex math and endless spreadsheets. But stick with me here, because managing money isn't just about crunching numbers. It is literally the lifeblood that keeps your brilliant idea alive and kicking in the real world.
So, picture this. You've got this amazing idea, right? You build a product, you launch the business, and people actually love it. You're making sales from day one. It feels great. But then, fast forward a few months, and the whole thing just collapses. The door's shut. Why does this happen to so many promising startups?
Well, here's the hard truth. It usually doesn't fail because the product was bad. It doesn't fail because people didn't want what you were offering. It fails because the founders simply didn't understand how to manage their business finance. It's really that simple. To make sure that never happens to you, we're going to walk through a 5-part survival kit today. We'll quickly cover 1. Why great businesses fail. 2. Revenue, profit, and cash flow. 3. Your financial health report. 4. Budgeting to control the flow. And finally, 5. Fueling and managing growth.
All right, let's jump straight into part 1, why great businesses fail, also known as the missing survival skill.
At its core, business finance is just the management of money inside your business. That's it. It's meant to answer 3 absolutely vital questions. Where's the money coming from? Where's it going? And how can the business grow financially? Listen, every successful company you know, from the local coffee shop down the street to giant global corporations, survives because they track these 3 things. Without this knowledge, even the greatest, most innovative idea will eventually hit a wall.
Moving right along to part 2, revenue, profit, and cash flow. It is time for a reality check.
It's actually kind of fascinating how often beginners confuse these terms. So many people think revenue and profit are the exact same thing, but no, they are completely different animals. Separating the money coming in from what's actually left over is a massive, crucial distinction. Revenue is the total money your business earns. Profit is the money left after all your expenses are paid.
Let's make this super concrete. Say your business sells 100 shirts, and you charge $10 for each one. Once you sell out, boom, you've got $1,000 in revenue. And honestly, looking at that bank balance feels pretty fantastic.
But hang on a second. You actually had to pay to make those shirts, right? You bought fabric, you paid for labor, maybe you had them printed. So let's subtract your manufacturing costs. We'll say for this example that cost was $600. So when you take that $600 expense out of your $1,000 in revenue, your actual profit, the money you can truly keep, is only $400. Always remember this rule. Revenue is the money coming in, but profit is what actually remains.
And this leads us brilliantly into something called cash flow. A lot of experts consider cash flow to be literally the most important part of business finance. Think of it as the heartbeat of your company. It tracks the actual physical movement of money day to day as it enters and exits your bank accounts.
Now, here is exactly where so many businesses get themselves into serious trouble. Imagine you made a profit on paper from those shirt sales we talked about. Sounds good, right? But your customers bought them on credit and haven't actually paid you yet. Now, at that exact same time, your employees and your suppliers are knocking on your door, and they need to be paid today. So you have profit on paper, but zero actual cash in the bank to pay the bills. This dangerous gap is a huge reason businesses go under. Solid cash flow is what actually keeps the lights on.
All right, let's look at Section 3, your financial health report. We're talking assets, liabilities, and statements.
To really get a read on your financial health, you have to balance your assets against your liabilities. These are basically the 2 foundational pillars of your company's financial state. Assets are the things your business officially owns, while liabilities are the things your business owes to other people.
To give you an idea, common assets would be the actual cash in your bank, your manufacturing machines, inventory, office computers, or even real estate. On the flip side, your liabilities are things like bank loans, unpaid bills to your suppliers, general debt, and of course, the taxes you owe the government. A stable, financially strong business is always going to aim to keep the value of its assets significantly higher than its liabilities. It's just common sense, but you'd be surprised how often it gets overlooked. So, how do you track all this? You use 3 essential financial statements. Think of these 3 working together as the ultimate health checkup for your company. First up, the profit and loss statement. This shows your income, your expenses, and your final profit. Next is your balance sheet, which details your assets, liabilities, and owner equity. And finally, your cash flow statement, tracking the real money physically entering and leaving the business. If you can master these 3 reports, you will have an undeniable edge over your competition.
Which brings us to step 4, budgeting, controlling the flow. Essentially, don't drive blindfolded.
I really love this quote. A business without a budget is like driving blindfolded. Budgeting is simply the act of planning exactly where your money is going to be spent before you actually spend it. Because, let's be real, running a business without a solid plan for your money, that is just asking for a high-speed crash.
The real trick here is categorizing your expenses so you can budget effectively. You basically need to divide your costs into 2 buckets. First, you've got fixed expenses. These stay constant no matter what you do. Think office rent or salaries. You pay the exact same amount whether you sell 1 shirt or 10,000. Then you've got variable expenses. These fluctuate depending on your business activity, like the cost of packaging or shipping those specific shirts out. Tracking both of these closely is exactly how you clamp down on unnecessary spending.
Finally, let's open up the last part of our survival kit, Section 5, fueling and managing growth through funding and tools.
Look, there will probably come a time when your business needs some extra cash to scale up. You've got several reliable funding options here: dipping into personal savings, taking out bank loans, bringing on outside investors, teaming up with business partners, or even launching a crowdfunding campaign. But I cannot stress this enough, a massive word of caution. Borrowing too much money can create huge problems down the road. You absolutely must fully understand the true cost of debt before you start signing up for loans.
Thankfully, keeping an eye on all this money moving around has never been easier. You absolutely don't have to do complex math by hand anymore. We have incredibly simple, accessible tools out there. Things like QuickBooks for your accounting, Stripe to process payments smoothly, and good old Microsoft Excel for your budgeting and data analysis. These tools automate the heavy lifting, so you can focus your energy on making much smarter business decisions.
As we wrap up this explainer, I really want you to take away this one core truth. You don't need to be a finance expert. You do not need a fancy, expensive degree in economics to succeed as an entrepreneur. But as a business owner, understanding this basic financial survival kit, that is totally non-negotiable. You just need to understand money.
Because at the end of the day, in the wild world of business, the people who understand money are the ones who ultimately control growth. If you start learning and applying these concepts today, your business decisions are instantly going to become sharper and vastly more effective. So I'll leave you with this thought. Now that you have this survival kit in your hands, what will your financial health report say about your business tomorrow?